Hey there, this is Bill with smarttrades.com, and today is Sunday, July 13th, 2014. It's about 4:30 p.m. Pacific time, and as always, please visit me at smarttrades.com if you'd like more frequent updates. I have a newsletter that publishes just about every day, and also live intraday updates via Twitter, and I'd like to share my analysis with you on a regular basis. At any rate, let's jump in here um, to the S&P. The S&P has certainly exceeded my expectations over the last couple of years. Nonetheless, it can still be counted the way it was in the last update back in September last year, with the exception that the fifth wave is extending. One of the problems with this count, to my way of thinking, is the proportionality of the A wave as labeled here relative to the C wave up, which apparently should be topping if this analysis is correct, but may yet have a little bit to go. A little bit more on that later. Anyway, you can see here the volume is tailing off. Certainly this market is overextended by almost any means that you want to count it, and a pullback to some kind of recent support is increasingly likely. This is a count actually of the late 60s and mid 70s S&P, and I proposed this way back in 2010 here on YouTube and elsewhere. And the basic idea is that the current market is following the expanding triangle or expanded flat type pattern that we saw back in the 70s. Very different economic scenario, but possibly a very similar type of pattern. The S&P has kind of gone past that on a proportional basis, but the Dow is almost exactly following so far the 1973 pattern. Now we can count this again either as a expanding triangle A, B, C, D, E, or as a expanded flat A, B, C of A, complex B wave up, and then possibly a C wave down. Either way, it points down below Dow 6,000 if indeed this count is correct. And certainly I have my doubts whether it is or not, but like I say, at this point, the Dow is almost dead on the upper channel target, as well as proportional targets that are similar to the 1973 pattern of this 1.272 times A. We peaked just a little above that on the S&P back in 73, and we're just a little bit above that now, basis the Dow. Here's the details in that count. Again, you can count the triangle, expanding triangle, or the expanded flat. Either way, it really doesn't matter. And here are the internal numbers within that count. Going to a little bit more of a short-term pattern. It's the daily S&P, and below that is the advanced decline line for the NYSE. Clearly, the NYSE is fading this rally right now. That said, sometimes you get this kind of pattern in a series of third and fourth waves, so it's entirely possible that the S&P can still make a moderate new high. Dragonfly Doji here on Thursday's low, and also Dragonfly Doji on this small fourth wave low. At any rate, support levels come in around the 1945 area, then around 1925, and then you drop down to a larger scale fourth wave below 1750. Anyway, this wave 1 up count, somewhat suspect, kind of a mess. That said, pretty clean 5-wave structure within a possible third wave here, and again, all the benchmarks of a third wave, all the hints that that we've got a 4-5 type pattern that's evolving now, with the non-confirmation from breadth, the shallow pullbacks in small degree wave 4s, and a clear 5-up pattern perhaps completing here. insinuating possibly that we're going to get a pullback again to perhaps that support around 1945, and then a moderate new high, and then perhaps a top. But we shall see. As always, I like to take this one step at a time. And again, if you'd like to get updated on just about a daily basis, please visit smarttrades.com. Here's the hourly count. Pretty significant short-term area here with a possible fourth wave or a B wave peak coming in around 1972, 1974. That was also what looks to be a small fourth wave pattern on the way up. So an important area, at least on a short-term basis. Breadth improved a little bit on Friday, but still we're making successive lower peaks in the S&P, and we have a possible, now I say possible, it's still not complete yet, ABC off of this low. So again, I'm going to watch that 1972, 1974, 1975 area, and then the last gasp, if this is in fact a short-term top here, would be up at the trend line and perhaps a little bit over 1980. If it gets through there, we're probably making new highs, which is not inconsistent with the larger scale count. Euro, we've been talking about a big triangle in the euro, and I think that's still what we have. Large scale, A down, B up, C down. We may still be working on an ABC of D here, and or it's possible it's complete. We did hit a trend line and fall from there. Pretty good support in that area just below on 135 in the euro. Crude, also, these counts are what we had almost a year ago. I'm just updating them. We're looking at a big contracting triangle in crude oil. A up, B down, C up, and either D complete here or D possibly still working. And the implication of that is that we may actually drop below 90 to finish off C of D. But again, it is possible that D already completed. So we'll address that in the newsletter or on Twitter on the shorter term updates. Natural gas did indeed put in a bottom down here back last fall, around the time of or late last summer, around the time of the last video update. I think that we've got an ABC, a little bit of a problem in that C is proportionally too large compared to A, but a real nice example here of a big congestion breakout, and then 5 waves up in an impulsive rally to resistance. Anyway, support at the top of that pattern comes in around 389, 390 or so, and we'll see if that holds. If it doesn't, it's possible we're going all the way back down to new lows in natural gas. Gold, I believe we're in a triangle in gold too. We shall see if again there's an optional alternate count here. If we take out 1393 or so, it's possible that we've actually bottomed, and that this was rather than a small B wave, this was a fifth wave. Lots of different ways to count the decline off the highs, but so far it looks like we've got a triangle from the middle to early part of 2013 with A up, B down, C up, D perhaps still in progress or complete, hard to say at this point, and then perhaps an E up, and then new lows. Dropping ADX levels, pretty consistent with a contracting triangle. Bonds, we were looking for a bottom back in late summer, around Labor Day weekend, and indeed we had a double bottom later into the winter, but that's what we got. We did bottom as expected, and in that report that I published last year. And from there, it's possible to count this as an ABC up. We can count this as a 1 down. To be honest, I am not certain about the count in the bonds, so I would like to see it play out a bit. nonetheless, we've got a pretty good resistance that's been holding around 137.11 and short-term support around 134.13. So watching that area for a possible breakout, and then we'll update the count accordingly on the shorter-term basis. And here's the 10-year note. 10-year actually made a new high, and this is a possible 4 or 5 type pattern. You've got a failure on that same rally on the bonds. That said, the decline that I've got labeled here as 1, somewhat questionable. Not good proportionality at all in the decline. Not a really clean pattern. But the rally from that low, from late last summer, early last fall, obviously, at least so far, a corrective looking pattern. So I would be looking at a possibility of selling failures up here. This could be a 1 down, it could be an A down, this could be a 2 or a B up. And in either of those cases, if we get a failure and another significant wave down, you're going to see a spike in interest rates, certainly in the 10-year note, if indeed this pattern plays out, and we shall see. Once again, please visit smarttrades.com and subscribe to my newsletter, and you can get the short-term updates just about every day. Thank you very much, and have a good week. Bye.